Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. And yes, Santo, I'm back after being offended by your, allegations that I called in sick because I was watching football up till late 3 o'clock. That is true, of course, I was, but I did not call in sick because of that. Moving on, of course, if we look at the market, the Nifty and the Sensex holding on to the gains. Of course, they are nowhere close to the day's high that we were seeing earlier, but still holding on in the positive territory and looking set for a second consecutive day of positive close for the benchmark indices. But the gains clearly are in the broader market, where the mid and small cap indices are doing much better, faring much better than their large cap peers. Also in the rupee market, the forex market, you saw a decent amount of gains coming in there as well after the sharp decline that we saw yesterday against the US dollar. Clearly, the sentiment there is being aided by the inflation data, the better than expected inflation data that came out in the US overnight. So overall, things are looking not, it seems like the bulls are holding their ground ahead of that crucial meeting of the US Federal Reserve, the outcome of which, of course, will come out later in the evening.
Well, and it does seem that this upswing will continue, as been saying earlier. Also, there's clearly the vacation factor at play, and besides that, you're not seeing any negative triggers. In fact, most of the incremental news flow seems to be largely positive. So these two factors are good enough to keep the market climbing some more. Although, again, CJ, the risk here is that probably this could lead to some kind of complacency. Now that the markets have been steadily climbing higher one way for almost more than a couple of months now. Quick look at the F&O Qs. We're seeing long build up in futures of VI, RBL and IDFC First Bank. In fact, other than these, we are seeing some very strong buying in PSU banks as well today. They've been absolutely on a tear since morning. And short build-up being seen in futures of largely FMCG names, Colgate, Palmolive and Dabur being the two major ones among that, and also some kind of short positions being built up in Page Industries as well.
Yeah, I think, Santo, I don't know if this is extrapolating probably what Page Industries had to say, but I think the outlook on demand from Page Industries was not really good, because Page Industries largely caters to the lower strata as well, the middle income strata of the society, and they said that at this point of time, the signals that they are getting from the economy suggest to them that demand outlook remains quite sluggish, even though they are seeing tailwinds as far as the margins are concerned. And I think that is what probably the market is extrapolating that into, indicating that maybe the scenario for FMCG or consumer staples may not be as great. It has not been great for them for quite a long time now. If you look at the volume growth numbers for a lot of these FMCG companies, has been suffering for almost 2 to 3 quarters now. But there was hope that after Rabi crop season, you could see some revival in rural income levels. Also, inflation probably coming down. That should also aid disposable incomes. But at this point of time, I think the outlook there is clearly becoming fuzzier and fuzzier.
Well, and also high valuations are not helping matters either, but FMCG stocks always have been fairly expensive, but it's when you're not having enough earnings to support those kind of valuations that the problems start biting. Well, with that, we move on to the stocks on our watch list this afternoon, beginning with Godfrey Phillips. Now, the stock has been on an upswing for the last few weeks, ever since the company reported its second quarter numbers. Pretty strong set of numbers there, top line crossing over 1,000 crores, and besides that, the company has been able to maintain its margins also at 24%. Now, according to brokerage house ULJK Securities, now the key things in favor of Godfrey Phillips at this point in time are that its major cigarette brands, that's if you look at Foursquare, Red and White, Stellar and Cavender's, they all have very strong brand loyalty. Besides that, Godfrey Phillips has also got a very strong distribution network which helps them sell their other products also, such as confectionery and chewing gum. Besides that, the company's international business, whereby it exports both raw tobacco as well as cut tobacco, that has also seen very strong growth during the quarter gone by, close to about 100% jump. Domestic volumes anyway have been also pretty strong, the growth there about 20%. And lastly, its convenience stores, 24/7 convenience stores, the share of revenues from there has also steadily been climbing. It has risen to about 12% of overall revenues in the September quarter. That was a jump of close to about 25%, and that's also one area where the company has been steadily focusing on. So these things could probably lift sentiment for the stock overall, and ULJK Securities has set a target in the region of 2,600 rupees for the stock.
Well, Santo, I think if you look at from a fundamental perspective, things have been improving for quite a while now for Godfrey Phillips, as they have been, of course, for ITC as well. But I think large part of this, I think, probably is now factored in the price, because if you look at it, look at the stock from a technical perspective, it clearly is now firmly in the overbought territory after what has been a very stellar 2022 for the stock, almost 70% gains, I think, this year on a year-to-date basis. So it has been it has seen a very good run, but now I think some bit of fatigue is creeping in. A lot of the momentum indicators on the technical side are indicating that there is a possibility of some consolidation of profit booking also creeping in on this counter. And let's not forget that, generally ahead of the budget, a few weeks ahead of the budget, tobacco stocks always tend to get a little nervous, because there's always the possibility of that odd googly as far as tobacco tax is concerned in the budget. So I think, given the fact that we have had a great run, your technical indicators are largely overbought, and also a budget is coming on the horizon, I think there is a possibility that the stock may remain quite lukewarm at least till 1st of February. And of course, if no negative surprises were to come out in the budget, then maybe you could see a resumption in the rally on this counter. So for me, I think getting in on the stock at this point of time may not make sense. I think there could be opportunities for investors out there later, in the coming weeks going ahead.
But well, CJ, I think if you look at all the concerns around budget time, they say the concerns seem to be overdone, because no matter what the tax, the demand for cigarettes never seem to go down somehow.
Yeah, that is true. That is true. But Santo, I think what a lot of organized players fear is that if taxes are raised, then they will end up losing market share, because illicit cigarettes or unorganized sector will probably, become more attractive to the consumers. Because ultimately you may not be able to ditch the cigarette, but you can always ditch the brand, right? Because ultimately you have to also take into consideration how much you can afford. We have seen that within even organized sector, there has been down trading in the cigarette industry, wherein people who earlier was smoking king size cigarettes had started smoking smaller regular size cigarettes as well.
Of the same brand, perhaps?
Perhaps of the same brand or the same company. But what happens is that brand loyalty is not sacrosanct. I think the loyalty to the cigarette may be sacrosanct, but the loyalty to the brand is not always sacrosanct. As you can see, probably, in the slim sides, slim cigarettes that have, boomed in sales over the past 5 years. Those sort of brands which do not belong to the organized players are actually now booming. So the fear for a lot of tobacco companies always is, with respect to taxation, that if taxation go up and prices go up, then they will end up losing market share to the unorganized sector.
This, probably I could keep the argument running, but we are running short of time also, because I feel cigarettes is one area where the brand loyalty is the strongest when you compare to many other areas.
I think, Santo, the jury is out on that. That said, moving on to the first stock on my radar today, and it's from the metal space, Hindalco Industries. A very interesting commentary coming out from Spark Capital, who have initiated coverage on this counter today. They believe that this company really has a very compelling case for investment, even though we have seen a decent amount of correction on this counter, and also the overall macroeconomic outlook does not seem that great. According to Spark Capital, Hindalco is probably one of those rare companies which provides structural growth opportunity in a largely cyclical industry, as commodities or metals generally tend to be. Now, according to them, the recent price erosion, or the coming off of the aluminium prices from the highs that we had seen in March 2022, also the possible demand slowdown as well, that is likely to be a transitory nature if you have a more longer term perspective on Hindalco. According to them, Hindalco is doing quite well, especially through its arms Novelis Corp, because its focus in aviation sector, aerospace sector, also is high ESG ratings and qualities, all make this company quite a structural bet compared to maybe some of the other peers out there in the commodity space. And also, according to Spark Capital, the valuations right now look quite attractive because of the fact that the EBITDA, or the operating profit of this company, Santo, is much less volatile compared to some of the other commodity peers. And also it is generating good amount of free cash flow on a quarter-on-quarter or annual basis. So given these arguments, Spark Capital is quite positive on this counter, and you can see that in the reaction of the stock today in the market.
Well, good comeback by Hindalco, no doubt about that. Over the last 6 odd months or so, the stock has managed to recoup a good part of its losses. But again, at this point in time, the stock seems to be lacking any major triggers, and both positive and negative triggers appear to be balanced at this point in time. On the positive side, you have aluminum prices which have been quite stable, and they are likely to remain that way because of largely supply side issues. But at the same time, Novelis has also slightly trimmed its guidance for the second half of this year. So, that was supposed to be a major trigger. In fact, it was the Novelis part of the business that had really got investors excited about Hindalco. Now, that seems to be slightly iffy at this point in time. There are some bit of headwinds out there. So, I think that could probably limit the big upsides in the stock. Of course, you may not see the stock giving up most of its gain, but how much could it rise from here at these levels? I am a little doubtful about that.
Yeah, I think, Santo, clearly in the near term, definitely there are a lot of concerns and there are worries, and there are genuine worries about the sustainability of the performance, the stellar performance that we have seen from Hindalco and the subsidiaries. But I think what Spark is also trying to make argument here is that if you can climb that wall of worry, then there is a very strong, possibility of long-term money making on this counter. At least that is the argument that I understood the Spark Capital is trying to make, and I think that is what some of the investors, at least not a lot of them, but if you look at the 2% gain on the stock today, clearly is indicating that some investors are buying into that argument.
Well, HPCL is the next stock on a watch list now. Antique is bullish on the oil marketing company space in general. The big argument being that crude oil prices have come off sharply, and they are likely to be in that range for quite some time now. Now, oil marketing companies have run up huge losses in the first 6 months of this fiscal so far, and probably the situation is unlikely to change much for the current quarter as well, because because they are sitting on pretty much expensive inventory. But according to Antique, one positive for oil marketing companies could be that now the next major assembly elections is only in May 23. So, it is very likely that the companies may be allowed to retain the prices, hold the prices at these levels, and not necessarily have to pass on the cut, largely to make up for the losses that they have been suffering for the first 9 months. And HPCL is among the company that Antique is most bullish on at this point.
Yeah, Santo, makes me wonder a little bit why the RBI probably kept its average crude oil, rate for over the next 12 months at $100 per barrel, when the actual global price is quoting somewhere around $75 per barrel. That said, I think this point of view at this point of time that probably oil prices will sustain below 75. I think that argument to me is not tenable, given the fact if you look at the overall oil industry dynamics, it clearly suggests that I think most of the participants will probably not want oil to stay at this current level, and therefore there is a possibility that you could see some sort of supply side moves being taken by some of the bigger players in the oil market, and therefore oil probably inching higher towards the $85 to $90, where a lot of these oil producing countries could be much more comfortable compared to $70 to $75 per barrel. Also, let's not forget China is the X factor here, because if Chinese demand does come roaring back in 2023, then that could possibly offset a lot of the slowdown that people are expecting in the US as well as Europe. Also remember, the third largest consumer, that is India, their demand clearly is not showing any signs so far of slowing down. So you have two key players, that is the largest consumer and the third largest consumer, doing well, and therefore only if they can easily offset the second largest consumer. That said, also the other point here with HPCL and of course with other OMCs, PSU OMCs, is the uncertainty around the loss recovery from the government. Now, in the second quarter, we saw a lot of these companies surprising analysts by reporting good earnings because they got a chunky amount of payment from the government in terms of under recoveries. But going ahead, whether the government will be willing to pay or not, maybe was this just a one-time payment, the uncertainty on this front, I think, is something that will cap valuations going ahead. So for me, it's a tactical bet at best right now. I don't think that these gains will sustain beyond a point of time.
Well, the margins, again, I'm quoting the Antique report here for OMCs now, they are at 17.8, the integrated margin, petrol and diesel both at 17.8 per litre. Now, this compares to about 7 per litre in FY21 and a little over 5 rupees per litre in FY22. So, Yes, the 9 months picture may not look all that great, but the fourth quarter clearly you will see these kind of margins reflecting in the
I think
numbers.
sequential earnings will be quite
and
quite
probably
an
at that point
improvement,
in time it could make a good tactical bet, as you say.
Possibly, yeah. Moving on to the last stock on the radar today, and that is from Tata Powers. I beg your pardon. This is largely a technical, bet, because if you look at the stock at this point of time, it seems like on the technical charts, it's looking quite attractive as a positional buy over the next coming, weeks. The stock recently, after going through a decent amount of correction, has started to take support about the 215 level, and the bounce back from there has been backed by volumes, and clearly that is always a good sign if you're looking for a sustained recovery in a counter. Now, according to Prabhudas Leela, the next leg of the rally will come when the stock breaches the 50-day exponential moving average at somewhere around 225 rupees, because then that could take the stock higher towards 240 rupees eventually in the coming weeks, according to the brokerage firm. And that is one of the reasons why they have advised their clients to buy the stock with a target of about 244 rupees per share, but with a stop loss at around 214. So very interesting bet coming out there from Prabhudas Leela, and something to keep an eye out on.
Well, the price action somehow seems to suggest that the easy money in the stock appears to have been made, and now the market is looking for some big move in earnings, and that is where I think it's been a bit of a disappointment as far as the last couple of quarters went. The stock price moved up very sharply, and now that the stock is beginning to look expensive, players are now waiting for earnings to catch up. So that I think could limit gains in the near term. Besides that, demand for power was very strong till about a quarter back, and that also is no longer the case at this point in time.
So with that IIP contraction of 4%, I worry for industrial demand as far as power is concerned.
So those factors, I think CJ could keep the stock in check in the short term.
And Santo, let's quickly take a check on the market before we wrap up the show, and it looks like we are going to end the day at least in the green territory, firmly in the green territory, at least for the point of time. Nifty now higher by about 0.3%, Sensex about 0.2%. So doing well. Nifty Bank, of course, a record day for the Nifty Bank. High is going to close. It seems like it's going to close above the 44,000 mark for the first time in its history. So really doing, banking names clearly doing quite well. Also, in the broader market, Santo, we are seeing sustained gains at this point of time.
Well, and clearly, the momentum is clearly with the bulls at this point in time, and broader market, that was the area of complaint so far, but towards the end of the year, I think that is also changed quite a bit. Lack of institutional activity clearly seems to be helping CJ, and that is allowing domestic traders and operators to kind of push the prices a little higher.
Yeah, and if you look at some of the individual counters, some big moving stocks today, Paytm down about 2%. Clearly that, the route which through the company is looking to do the buyback, that has not gone down that well for investors, and therefore you can see some bit of profit booking coming in on that counter. Also, Yes Bank surprisingly down about 8%. A very negative report coming out from Morgan Stanley on that lender, and therefore the stock cratering about 8% after rising almost 20-30% the past 2 to 3 sessions, especially once that RBI approval came in for the Carlyle as well as Advent stake purchase. Also, some of the cement names not doing that well. Ultratech down about 0.3%, and Bank of Baroda, surprisingly, in a booming PSU space, is down about 0.7%.
Well, there was an interesting tweet that influencer Nuresh Mirani had put on Twitter. Now, what he's pointed out that in case with many of these banks, the market capitalization is far higher than what they used to be in 2010. However, much of it has come due to expansion in the equity base. That is something that investors need to be mindful about,
because they keep on issuing shares to
especially in the case of Yes Bank itself. If you look, there's been almost more than a tenfold increase in its equity base over the last 3 years. So that is also partly driving. Interesting points there made by Morgan, and in fact I missed you this morning, CJ. I thought we could have had a good banter on that one. Morgan Stanley had mentioned that the return on equity probably could improve up to 1%. Going up to FY25, but from there on the improvement will be at best gradual, and also currently at about 1.6 times adjusted book value for FY24, Yes Bank is not looking very cheap either.
Yeah, it is possible. I think at this point of time, given that we have seen such a swift rally on that counter, probably some people will start now wondering whether these sort of valuations are justified or not, and I think the stock will probably go off the boil, because now you would want to see some bit of earnings recovery as well. You want to see, those industry-beating loan growth numbers as well, and only then that will add to the confidence. But it seems like general trajectory of Yes Bank is much better, at least where it stood 2 years ago, where it was almost at the brink of bankruptcy.
Well, and with that, what are the key things that we need to keep an eye out for?
Well, Santo is just monetary policy and monetary policy all the way. Of course, you will have the US Federal Reserve's monetary policy outcome coming out later in the evening. Then tomorrow, you have the Bank of England as well as the European Central Bank coming out with their monetary policy outcome. So it's policy week, it's policy day in Europe. And also, apart from that, very interesting news coming out of China, wherein the Chinese government is scheduled to hold a high-level meeting later this week. It could be possibly tomorrow, it could be on Friday, wherein there is a possibility of fresh measures on stimulus front for the economy, given the fact that China is already now very rapidly unlocking its economy. So some very interesting cues to watch out for from a global perspective.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. Thanks for watching as always, and also sharing your feedback.
And guys, keep following us on the social media links that you can see at the bottom of the screen. And for the rest of the financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.